So it's an interesting group in here. I have Josette Sheeran, I believe will come. She's on a plane. She was the World Economic Forum Vice Chair. She's Andy Rice's right hand. But she's on a plane. It's hard for her to join. Coming from Austin, Suzanne is, we have several people. Suzanne and Dan are sick today. So Ivana, our sweetie, is going to join us. She's also joining us in Riyadh. A number of you are. And she works for family office, Royal Family Office from India. We also have Mary D'Souza and Stephen Burke, who, if you don't know, hard to not to know that you know, he's our anchor, Uncle Stephen, every Tuesday, yesterday, tells us what's happening and really picks up the conversation. So, Tuesdays, you're all welcome. Our team is gathering. So we have Stephen and Mary pick up our how we see the world, what scares and excites us. Maybe share an insight or two that we're not thinking about. We will take up. You'll see that this is a very interactive discussion. So if you're new to us, it's not going to be there talking and we listen. This will turn very quickly to you asking questions and sharing insight. It's going to feel as if a round table, which some of you don't know us. So let me just do 60 more seconds on the basics. The 360. Actually, let's go to the one firm. The one firm comes from Arthur Anderson. Who remembers Arthur Anderson? I have a third grader, a 10th grader, and a sophomore in college. My sophomore in college knows what Arthur Anderson is. But it was the greatest firm. Partner. I was working in Europe, Russia of all places. And but I Korea, around the world. No one said, "Is that a U.S. project? Is that a corporate finance project?" No, it's an Arthur Anderson project. We all came together. We are one P&L, and that philosophy, and then living abroad, because I think, well, there are a lot of great family office groups. But do they host in Riyadh? Are they hosting in Mumbai? We want to connect everyone around the world. You know, you might be looking at private credit. You might be looking at whatever the asset class, and we're a company, right? Russia is a great example. It was easy to be on the internet, and Russia just copy Yandex and or list.ru, Hotmail was mail.com. There's so many things you see the Uber coming, and then it's happening in Singapore, it's happening in Jakarta. That's sort of what we can do as a global group. We can see these things happening and share. And the 360 is like I'm from a small town, blue collar town, not too far from Intel, and some of you have been there. I was there this past weekend. I was definitely coming back, but I didn't know anybody in New York. I came here in 2004. I knew more people in London. So I went to my alumni, Michigan, Denison, and I was underwhelmed by the alumni events. So I had to create my own, where everybody, I wanted the antithesis of what I was experiencing. No inefficiencies, everyone introduced themselves, and sometimes we've even done that. We did it this morning. And we're going to do that with our roundtables later today. So 360 is getting everybody together around. But with all that said, what we do is we raise capital. So let these people here are funds or companies that we raise capital for. Usually we take 20% of the management fee to carry. So we're in the long haul. Sometimes people protect our carry. Everything. A couple points on it. But we're usually in for the long haul, along the way. And if we raise money for a company, we usually take less than cash and take warrants. We want to be. We don't have to. Show mirrors and things from time to time. You're new, and even one of what we're doing is just educating each other along the way. Although, yeah, we created Stephen.
I'm an investor.
Exactly. So we some things will just happen organically. So wait, that's us. With that, I want to turn it over. Stephen wants to go last.
Ladies first.
No, actually, it's
And I,
Steve's first.
and I need to get my notes.
I mean, you set it up.
I'm gonna let Mary. You're really good at this anyway. So I'm gonna let you. How do you see the world scared that excites you? On April 2nd.
You want me to introduce?
Oh, yes.
So, hi, I'm Mary D'Souza. Great to see all of you. Mark, thank you for inviting me. I run a single family office, Nisha Investments. We invest both in public as well as private. Public probably 60%, private about 30 to 40%. This is like the perfect time to talk about diversification, because if you're solely in the public markets for the last month or two, you'd have felt a lot of hurt. You'd be in a world of hurt. So I really think as family offices, we have to be very diversified. We have to have both public as well as private. And on the private side, I really like private credit, because the way I look at it is, where can I get a certain amount of certainty, right? And if you have managers who can really analyze credits and also have operational expertise, because if you look in the last 10, 15 years, we've had the financial crisis, we've had COVID, we've had interest rates going up. And if managers don't know how to deal with all of that, you could lose a lot of principal. So you have to look for credit underwriting and experience across several cycles. I also like real estate. And for more alpha, I usually look for managers who are really good at VC and growth equity.
I can go. Hello, everyone. My name is Impana Shri. I'm a Chief Investment Officer at a family office called Coherent Inc. I like to think I sit at the intersection of entertainment and finance, and I do work with the family office in India, the Royal Family Office of Jaisalmer, to help with them on their impact-related investments and initiatives. I will touch on a few topics in terms of things that I'm seeing, just given who I am. One biggest thing is the India-US changes that I'm seeing. I moved to the US about 10 years ago, and I had not looked back at India for a while. What I can say is India has no longer been the same. It hasn't been the same in the past 5 years alone. Growing up, like I had my own startup in India. I went to engineering. I was a woman. There were societal and traditional and all sorts of constraints that just affected us. But it has changed in the past 5 years alone. It has made me feel that, oh my God, did I come searching for gold while sitting on a diamond mine? Both are good. All treasures are good. But what I'm seeing right now is India is no longer becoming a tactical growth play for funds, for LPs. It's no longer a cost arbitrage market. It's becoming something that's purely fundamental, that it's almost you need to have it. But while it excites me, like the especially in the consumer space, there's a prominent family called the Ambanis that democratized access to internet, and that has changed the landscape completely. People have now access to more content, more knowledge, and they're building companies, and women are being empowered. I am surprised, and men are coming in support of them. It's wilder than the Wild West, as I like to say. I think it's becoming the electric East almost. While there is such a strong interest in the space, I also ask that you proceed with caution, identify trusted advisors, trusted players. That also scares me. Um, um, Another thing that also excites me, just given the spaces that I play in, consumer is such a huge market right now. I'm seeing US brands wanting to enter um, the Indian market, um, whether be it in consumer, in the tech infrastructure, you name it. I'm seeing family offices getting institutionalized more and more. Um, uh, Startups having insane returns, and some of the funds that I've worked with, while they've invested in consumer, they're seeing 35% IRR. Uh,
So what scares you?
just finding the right partners in the Indian market. It's really really tough. Finding trusted partners. I think there's a cultural difference that you have to be mindful of. How things are conducted, how culture plays into making deals while you're talking to different heads of the family, different members of the family, the timing of when you do certain deals. I know this sounds strange, but people refuse to do any deals before the new moon, or it's very important. I'm not saying there's certain scientific reasons that they don't do it, but when you show that you understand their culture, understand how to talk to someone, you talk to different heads in a different way, different people in a different way. It really really makes it goes a long way, and building trust with the right people, finding the right partners is what scares me. I've heard so many scary stories of a deal not going through. So trust is everything.
Segue from that.
Yeah, I made this mistake the last time because I went after Zoe Cruz the last time and that didn't work out very well for me either. So pleasure to be on the panel with these two amazing ladies. I just say quickly, there's to me 5 big changes that are going on that impact asset allocation and should impact the way we're thinking, both short-term and intermediate term. One is, for all the hopes, I don't expect peace to break out anytime soon anywhere in the world. So geopolitics is not getting any better, and the globalization of fragmentations could make relations worse, not better. And unfortunately, I think the U.S. is taking the lead on the latest round of disruption there and disorder. I think on trade, we're actually seeing that changing terms of trade, which will be played out later today in ways that we'll know over the next couple months, hopefully. It doesn't drag on too long, because if it drags on long, inflationary pressures go up greatly around that. I think from fiscal policy, we're seeing some big changes. The US going to austerity, while Germany, China, Germany and Europe stimulating, China stimulating for stability. I think Germany and Europe are stimulating to deal with the problems created by the US and China. And their own making inside Europe, because they've made a lot of mistakes there. I think monetary policy has become much more two-sided. Everyone was looking at rates going down, continuing to go down, and big rate cuts from the Fed and the ECB. I think it's going to be much more challenging right now with tariffs to see that come to light. So I think those are a couple of the main ones. And I think generally we're seeing massive post-World War II institutions coming under pressure, again, driven by the US primarily, and that creates some challenges for how we move forward. So I think what scares me are 3 things. I'm not as confident in global leadership as I would like for the challenges that are being presented today. The second thing that scares me is global debt and the ability to manage that debt, particularly given the economic problems the world is facing. And the third thing, and I think this is a newer one, and it's created some major concerns around the world, is people questioning commitments to the rule of law by governments in the West or from democratic governments, and how that plays out. And then lastly, I'll just close with what excites me is, with all that negative stuff, the world continues to evolve in amazing ways that we can't imagine. Is with AI and other areas, the ability to improve productivity and to change people's lives is all in front of us. So that's where I'll stop, Mark.
So, okay, we're here to talk about private credit and private debt, private equity. So just on that, so I know you like it, Mary.
It's my background, yeah.
Right. You like what you know.
Yeah.
Just tell us what you think, how you see the markets shaping up, how you think we should be thinking about participating relative to other asset classes.
So as you know, I worked at GE Capital, and GE Capital was a middle market shop, where we did both lower middle market as well as middle market deals. And I think on the private credit side, it's so important to have operational expertise, to really do your due diligence, to have governance, to make sure that it's structured right, so that when things go wrong, you have a place at the table and you can work out the credit. So it's really, really important to find the right managers, right? And for me, I have, working at GE, I knew most of the managers in private credit. I'm invested in Star Mountain Capital. I've known Brett since 2009. And I started out with Fund 2, investing with them. I'm also a strategic portfolio partner over there. And I look at various managers who are a little bit smaller, because it's not about asset gathering. Because when you're looking at asset gathering, it's all about doing as many deals as possible and doing large size deals, because your funds get bigger and bigger. So whether it's private credit or private equity, or whether it's investing in venture capital or growth equity, for me, managers are really, really important. And I do a lot of due diligence on them. And I want to see interests aligned, to see if they share with the rest of the employees. Because if it's just the senior partners making a lot of money, you don't get the same alignment of interest. So there's a lot of things that go when you select a manager, whether it's in private credit or other asset classes.
I would say, I think we learned, if you saw the slides in the earlier session, and Bill Deukler did a presentation where he looked at the range of returns from the top quartile to the bottom. In private equity, it was, I think, a 30% gap, reinforcing your need for strong due diligence that both of you ladies represented. Because I think the other change that we really have to come to grips with is we're not going back to zero interest rates anytime soon. And if we do, it's going to create there's a whole nother level of problems you want to worry about. But I think the ability to produce returns at 4% are going to be a lot different than they were at zero. And I think that means much more caution and due diligence and better asset allocation strategies across the board. I also think that the benefit of private credit is you do have the liquidity options that weren't available in other privates. So I think that's a big change, because I think liquidity matters more today than it has at really any point in time for the last 15 years.
Yeah. In terms of some of the areas that, some of the areas that my company is looking to invest or is investing, while AI has been great, we're trying to look at companies that are more developing AI solutions that are more tailored to enterprise needs, that can work with their other existing platforms and other existing technologies. We are also seeing AI chip market increase as well, and companies that are more aligned in that space is what we're interested in, whether it be TVs, larger PCs, so on and so forth. So that's some of the things that we're seeing in the private markets and where we're looking to invest.
So questions, thoughts from everyone?
I wanted to add one more thing to India.
Yeah.
So I was at an AGM of one of the funds I invested in India, in Bangalore, like 2 weeks ago. And what was really interesting is you talked about consumer, right?
Yeah.
So they're invested in Bluestone jewelry. So when I first saw the investment, I was like, oh my God, am I going to get my money back, right? And there was an up round, and they took some of the money off the table at 3x.
Oh, wow.
And I'm like, none of my other funds have given me that kind of return.
Yeah.
And the interesting thing about India funds today is the companies start in India, but then most of their revenues come from Europe and the US, because especially if it's a software company or a cybersecurity company or an AI company, they start over there, but they become like global companies.
Yeah.
So
Yeah, I agree 100%.
Can't hear you.
I agree 100%. In terms of consumer, there's a lot of people want to spend, but they don't know where to spend. So these companies that are starting out now are, benefiting a lot. The one thing that I've noticed is like patterns, right? That's what I'm really good at. And I grew up in like 14 different parts of the world. India I see now is very reminiscent of 80s and 90s US. We got our first Apple store 2-3 years ago. I cannot believe that. Like I couldn't believe that. So think of whatever was happening in the US at 80s and 90s and try to replicate those similar investing strategies in India right now. That's what I would say.
Mary, you brought up doing due diligence on funds to invest in, and for anyone, especially in this room, it's clear how institutions have teams and processes and do all that. But from a single family office perspective, how do you approach doing due diligence?
yeah, so I'm a little lucky because I worked at GE. And so I got to see a lot of deals, but I also got to see a lot of private equity sponsors, as well as private credit guys, as well as hedge funds. And because I was on the sell side, I also got to see what kind of diligence they did when they invested in my deals. So I have a lot of institutional knowledge about each and every manager. And so as a single family office person, it's a little easier for me than most other single family offices to invest.
What'd you do?
How would I do
The due diligence.
for
As a single family
As a single
office.
family office.
um
I have someone on Zoom that wants to.
Yeah.
I want Art. Art, do you mind? Because you're developing something that what you call the India-U.S. corridor. I'll pin you so people can hear you. You're in Texas and all of that.
Sorry, Mark, I didn't hear all that. Would you mind repeating it?
Yeah. So it's let me get you on here. 1 second. What you're developing in India is we're talking about it seems to be a theme here so far, kicking it off. We're going to talk about private credit and equity, but we're talking about India. Go ahead.
Right. So I'm Parth Vakil. Nice to meet everyone here. And the family background is had a chemicals business in India, and my focus has been really developing a more formal family office structure around it. Um, we've invested both in the US and in India. And what I'm doing right now, what we're looking to build is essentially a platform for cross-border allocations, right, between the two markets. And I think, to some of the points that were made on this panel, the investment landscape is just drastically different in the two markets, right? And the way you would vet and select managers, especially I would say in the equities space and public markets, varies drastically. And, really sifting through what was kind of beta driven and what was some of the fluff that may have driven performance in Indian markets is something that we've been paying a lot of attention to, right? And I think is very hard to do sitting here in the US, and requires extensive on the ground knowledge and folks there. Now, with that said, I think that the growth story is getting to a point where it's extremely compelling for people, especially in the US. But how do you actually play India is something that we've been solving for a while. We think we have a decent handle on, and we're looking to, yeah.
You're sort of a co-host mobilizer of our Mumbai event in October. So this will be a continuing theme, but it's now 2:00, 2:01. I gotta switch gears in the India panel. That's okay. Thank you for that.
Thank you, Mark.
we'll keep this thread going. So first, thank you, everyone. We're gonna move on.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.